Hi everyone, and thank you all so much for joining our newest Think Out Loud session. My name is Karina and I'm part of marketing team here at Think. Before we start, I'd like to share some technical instructions for the webinar. So all participants will be muted during this session, but if you have any questions, please do not hesitate to submit them by the question tab on your right in the GoToWebinar console on your screen. We will have approximately 10 minutes for the Q&A session at the end, and we will try to get through as many of the questions as possible. Another important thing is that we will share the recording of this session afterwards. So now, without further ado, Jan will be talking about how to take advantage of open banking. Over to you, Jan.
Thank you so much, Karina. Thank you. So once again, my name is Jan van Vano, and let me begin by saying that it has been a crazy year, literally flipped upside down. And there are many people who, simply cannot wait for their lives to go, back to normal. But the thing is, normal will likely never be the same, right? So one thing I've noticed is that we've been incredibly flexible to do things differently. Organizations have been flexible to run things differently, and many processes, despite all of our prejudices, have been flexible enough to, in order to deliver the same outcomes. And I've noticed that, especially in the world of finance, we have now moved from an idea of something digital being a substitute for something physical to a situation where we've come to the realization that many physical processes may actually be a substitute for digital processes that are designed by default. Now, the norm is now digital, and I think that's not something new per se in the world of open banking, but it's good to take a minute and contemplate what that really means, what that impact really is, and what that really requires in order to successfully be realized. All right, let's get it on with. So I work as a research director here at Tink. I joined about 2 years ago. When I joined Tink, I remember that I remember thinking that open banking was going to be that next frontier in the financial services industry, and I think we're now in a really unique situation where we're seeing open banking mature globally. And to be honest, that's making me more excited than ever. Because like I said, and as I've said many times, Tink has been in the space for a long time. And Tink was founded back in 2012 in Stockholm. And even back then, Tink was enabling intelligent banking solutions through the use of open banking technology. But actually, the notion of account aggregation or that notion of open banking goes back even further, even before 2012, even before Tink was founded. We define open banking as the exchange of data and services between financial institutions and third-party providers in order to deliver and create enhanced capabilities and experiences in the market. Now, taking a step back, we're seeing open banking spread across the world. And we've been seeing the shift happen for many years, but I think it's more concrete than ever nowadays. Because from Canada to Japan, from Brazil to Australia, and from Mexico to Hong Kong, regulators all over the world have put in place or are developing new legislation to enable open banking. And the open banking regulations in every market are just slightly different. What we have in common, what these regulations have in common, is that they aim to increase transparency, they aim to increase security and protection for the consumer, whilst at the same time, they're aiming to increase competition and innovation in the market. Now, Europe has been pioneering in terms of open banking, especially from a regulatory point of view. It's not the only country. I think we'd often refer to South Korea as an example of a market where there's been high adoption of open banking technologies among consumers, with nearly half of the population using open banking technology. But I think the Europe especially has set an example of the type of momentum that open banking can bring. Today, Europe is counting over 416 licensed account information service providers and payment initiation service providers, better known as third-party providers, TPPs in the industry. And this is an 80% increase compared to last year, the same time last year. Now, what's interesting is that the growth of and the number of businesses that are licensed, that acquired one of these banking licenses, differs greatly by country within Europe. And I have to give my credits to the UK, for instance, where nearly half of all licensed institutions are established in the UK. And what that shows is that where there's confidence from the government and where they're looking to empower an ecosystem in order to generate new innovation and new types of solutions in the market, we're seeing an entirely new industry emerge, an open banking industry, and which is helping and helping modernize the financial services industry and creating a new segment on its own. And this isn't just reflected in the number of new businesses that are licensed this way, it's also reflected in the investments. A market research firm called Allied Market Research forecasts that the opportunity for open banking technology will be about 43 billion US dollars by 2025, representing a compound annual growth rate, a CAGR, of 24%. Now, I would actually say this is a very conservative estimate, and it doesn't even bring into perspective the indirect effects and opportunity costs that open banking can improve by transforming not just the customer experience, but most importantly, by enhancing processes and reducing risk. And we know that financial institutions are taking this seriously as well, not just from a compliance perspective, but also from a product innovation perspective. Because when we, looking at one of our previous survey reports, we discovered that the median spending on open banking, including both capital expenditures and operational expenditures, is in the range of 50 to 100 million euros. Now, this is a phenomenal amount of money, and it shows how significant the open banking regulations of a burden is on the cost structure of a financial institutions. But at the same time, it also shows the incredible amounts of confidence and investment that's going into this space. So the 416, hopefully by next year, we're going to see that double again. But things have happened in the meantime. And I think we need to stand still in terms of looking at what's ahead, because we cannot forget that we are in the middle of a crisis, right? A crisis that no one could have predicted and is impacting millions or even billions of people around the world. The IMF, the International Monetary Fund's World Economic Outlook, forecasted a global economic decline of 5% in 2020. And since the lockdown, Rishi Sunak, the Chancellor of the Exchequer in the UK, predicts that the UK GDP is expected to decline by more than 11%. I mean, he shares his concerns that the UK is currently in an economic emergency, and he expects the economy to contract by 11.3%, which would be the biggest fall in output in over 300 years. Now, things are starting to look up. Governments have made huge budgets available to support businesses in need, and they have progressive distribution plans for a promising vaccination strategy. So as we move into the new year, it's not going to be a year of open banking. It's not going to be a year of value creation. It's going to be a year of crisis recovery. And I sincerely believe that open banking will play a key role in this recovery, not just in the UK and not just in the EU, but around the world, there will be an acceleration and increased demand for data in order to reduce risk, enhance creditworthiness assessments, and improve debt disposition analyses, improve underwriting, and income verification. These are all use cases that can be enabled by open banking in a more convenient, intuitive, and seamless way than ever before. So over the past 12 months, we've published a series of studies on how financial institutions are responding to the open banking movement. Our first report addresses the shift in open banking attitudes. It shows a positive sentiment on average towards the open banking movement compared to 2019. The second report addresses the investments in the context of open banking. As I pointed out before, they are astronomical. And what's also interesting is that they are expecting quite quick returns on average. So I think over half of organizations expect positive returns within 4 years, and 80% of organizations expect positive returns within 6 years. So only 2% expects no return on their investments. So that provides confidence in many of these investments. And we also discovered that it's touching every part of the business. For instance, that there's a huge portion of the spending going into modernizing legacy IT environments, and that is being captured within the open banking budget, but also to optimize internal processes such as the KYC process as well as the onboarding process. Only approximately 10% of open banking budgets is actually creating tangible outcomes for the customer. Now, the third report looks more at where the money is being spent, the use cases of open banking. It should come as no surprise that many of them are related to compliance, digital identity services, KYC processes, transaction monitoring are all areas where open banking technology is being used in order to improve these compliance areas. But it also shows that the battle for the customer has begun. Organizations are starting to invest in areas that help them increase engagement with their customers. I believe that many of these priorities have now been reshuffled since the recession. And many financial institutions have a big opportunity to start taking advantage of open banking, especially in response to the current recession. But this is easier said than done. And this is one of the themes for our final report. And that's what I want to share with some of you on the call today, is some of the insights that we've gained on the topics of alignment within the organization and perceptions within the organization. So let's go into it. Let's start with the shift in perceptions. So here we're showing the results by archetype within the organization, from C-level executive to channel owner, and showing to what extent they agree with a number of statements with regard to their perception towards open banking. One of the statements that we provided is whether open banking is viewed as an opportunity within the organization. What we see is an important gap between C-level executives and product owners. Product owners are those who are typically responsible for delivering a tangible financial product or digital service. Although C-level executives are confident in the organizational view on open banking, with nearly 70% of them agreeing, less than half of product owners believe this as well. We find a similar trend when we ask if the benefits of open banking are widely understood throughout the organization. Only 42% of product owners agree, compared to nearly 2/3 of C-level executives. Now, there's an important question whether the product organization has been informed and properly educated around the motivation to invest in open banking and how they can start taking advantage of this. But to me, the most interesting insight here is not from the product owner, it's actually from the channel owner. So when we ask if organizations have a clear strategy to realize the benefits of open banking, channel owners generally agree. Now, just to understand, who is the channel owner? Typically, the channel owner would be an executive responsible for the delivery of the interface, mobile banking interface, a online banking interface. It could also be the developer interface. These channel owners have been exposed to a lot of compliance-related objectives in order to enable strong customer authentication through SEA, in order to provide APIs for TPPs, and in order to manage basically all those interactions across the number of channels, because they have increased, they've multiplied exponentially with the introduction of PSD2. So when we ask if the benefits outweigh the costs, we clearly see that this has been a struggle for those who are working at the channel. Less than 40% of channel owners agree with this statement. It's a stark contrast compared to C-level executives, as 2/3 believe that the benefits outweigh the costs. Perhaps this shows that the executives responsible for delivering SEA and complying to PSD2 are not seeing the immediate outcomes. They fail to see the bigger picture of open banking, of the open banking movement, and how that's shifting the industry. The gap becomes also evident when looking at the alignment by function. So here again, we've asked respondents to reflect on several statements, but now we've grouped them not by seniority, by archetype, or by their role, but by the department that the respondent identifies with. One of the issues that the product organization highlights is that they feel that they do not have access to the right talent in order to execute on open banking objectives. Other departments are generally more confident in this. And I think when we're talking about the response to the recession, especially the response to improving onboarding in terms of reducing risk in order to increase transparency, the product organization should be more confident in being able to get access to the right talents and the right capabilities. Because that is actually where we see an interesting contrast. When asked if the products and services are taking advantage of open banking capabilities, we see a big gap in the data. Only 32% of decision makers in the digital banking department believe that they have the products, that they have products and services that are taking advantage of open banking capabilities. This is important because in order to respond to that recession, in order to keep up with the pace of innovation, it will be critical that these capabilities become available to the right departments and at the right time. This is especially an interesting contrast compared to the IT organization, where perhaps a lot of the development is happening, where they do feel that those capabilities are available, but they've clearly not been sufficiently integrated, or at least perceived to be integrated by the rest of the organization. And looking at the current situation, I'd say this is really keeping financial institutions from fully taking advantage of open banking. It's making those capabilities available across the organization. And there are some financial institutions who we've spoken with that see this as well. So in order to validate some of those insights, I've spoken with Miles Hillier. He's the head of digital propositions development at the Natwest Group. He is a key member of the Natwest technology leadership team, and he's leading the strategic response to defend Natwest from increasing competition from neobanks and from fintechs. He's done a lot of research in the space, and he's concluded that open banking is a key enabler for them to deliver value to customers. More interestingly, over the course of the past 2 years, they've done a study in order to in order to justify some of their investments that they're making in to enhance products and they're making to enhance the interface. And what they've found is that the more a digital customer engages with the mobile banking application, the more likely they are to acquire a new service or a financial product from the NatWest group. In other words, engagement equals customer lifetime value. And that's been an important area for them to make an investment. So what they've done, and also looking at the increasing competition in the market, the increasing competition from PSPs, the increasing competition through multi-banking solutions from other retail banks, they have launched a money manager within their mobile banking interface, focused on their primary customers. Now they call this a Better Off. This is the program, they call this Better Off because they're trying to help their customers who are in need become better off in the current, despite the current recession and the current pandemic situation. They've implemented some of our money management technology, but the outcomes have been phenomenal. So they've rolled this out to nearly the entire retail banking population, over 5.5 million users. And they've seen incredible adoption. So I believe it's over 60%, it's nearly 80% of all mobile users are now active users of the technology that they've released. And this doesn't just allow them to help their customers better manage their finances. This is allowing them to gain a better understanding in terms of what the needs and wants are of these customers, to anticipate financial needs, and be able to provide actionable advice in an intuitive, non-intrusive way to those customers. Because as they had to close down physical retail branches, this has become an alternative in order to engage with their customers. Not just an alternative, it's become one of the primary interfaces in how they engage with their customers and provide financial advice. Now, like I said before, Natwest here, this has been an effort in order to improve the financial well-being of the customers, but they're also seeing the rest of the market move in a similar direction, right? There's a battle to defend market share. There's a battle to consolidate the customer relationship, and there's a battle to improve the customer experience. A lot of banks are responding, doing this in response to the innovation that's coming from typical PSPs, from other payment institutions or from other banks. And even they were often referring to the emerging big techs in the industry. But what I want to spend a little bit of time on is potentially one lesser known emerging player. And that is an incumbent that's actually well known in a different industry, NL, and its digital subsidiary NOx. So NL is one of the largest energy companies in the world, if not one of the largest in Europe. And NOx is their digital subsidiary, primarily known for their electric vehicle charging points. Now, what they realized in replacing a lot of the petrol stations and fossil fuels is that in order to make this a scalable solution, they need to deal with a huge amount of transactions. On top of that, they're not just dealing with consumers and acquirers, they're also dealing with prosumers. So potentially households that would like to generate electricity and sell that back to the grid. And in order to make that simple, and in order to create an end-to-end solution for this, they realized that they've needed to change the way that they acquire capital. So they've acquired a company called PayTipper. PayTipper has typically been known for point-of-sale solutions for merchants, but they're now using this technology not just within merchants' facilities, but at every one of those charging points. And this technology improves bill payments, it allows them to improve acquiring, and it comes with a marketplace to allow other fintechs to develop on that. But their relationship isn't just with the merchants, it's also with the with the consumer. Over the summer, they've launched a new product called NLX Pay. And as they say themselves, open banking is their monetization engine behind this. They're increasing loyalty by providing a 10% cashback on all credit card transactions, but they're using the insights from open banking in order to help their customers achieve their financial and sustainability goals in order to create a smart home and a sustainable home that is carbon neutral. Now, why would an energy company move into finance? Well, for them, they believe it's a natural consequence of the digitalization of the industry. A cashless society is an electrified society. That is their primary belief. And I spoke with Matteo Concas, and he believes that the technology that they're developing isn't just going to be relevant for the energy industry. They're looking to potentially even white label this technology to allow other retailers, transportation companies, heck, even healthcare companies move into the fintech space. So it's going to become incredibly crowded, and I think it's critical for financial institutions that they focus on campaigns in order to make sure that they increase the awareness of open banking and focus on those opportunities in times of the recovery of the crisis. So in conclusion, I mean, from this report, it's quite clear that there are opportunities for financial institutions right now to get open banking on that product roadmap. It's not just a compliance effort, and it's not an effort that needs to be limited to the channel. It needs to be embedded, especially within products. As with the current crisis, there's an opportunity to reduce risk and reduce costs, and open banking is going to be a key enabler in that. Second, embed open banking capabilities across the organization. So what we're often saying is open banking has opportunities in every stage, from onboarding to engagement to driving sales and conversion. Think about the customer lifecycle, and you'll find use cases for open banking at every single stage of that journey. And finally, it's really all about the data. So what open banking is doing is unlocking that data. So thinking about how that data, with consent of the user, can be used for product development will accelerate the appetite as well as the prioritization of open banking use cases. So with that, I'm going to pause here. I'm going to say thank you very much for listening to the story so far. I'm going to check with Karina if there are any questions from our audience. And I also want to invite all of you to feel free to connect with me following this webinar if you want to engage with me directly. But over to you, Karina.
Thank you, Anne. Thank you. And thanks to everyone who attended our webinar. As promised, we will send out a follow-up email with a link to the recording of the session, as well as to the full report. All of our previous reports are available at openbankingtink.com. Now, let me check quickly if we got any questions. Yeah, and I think this one actually sounds interesting, and it's, can you provide some example on how open banking will enable the crisis recovery?
All right. Oh, great. Yes. So on Friday, the EBA is going to publish a transparency database of all of the non-performing loans for nearly all of the financial institutions across Europe. Now, this has been an exercise in response to the pandemic, and it basically shows what the risk exposure is for every single bank. Now, open banking is going to allow many of these financial institutions to get a very easy and intuitive way to do a credit assessment and basically a debt disposition analysis on their exposure to see what has changed in the customer's profile in order to better assess whether there's a probability of the debt being defaulting or rolling over. That's a key use case, but it also starts with the point of onboarding, right? So not just in terms of doing a credit analysis, but also being able to do income verification, and being able to get a clear idea on what the cash flow is. And there are standard metrics and uniform, or not entirely uniform, but there are creditworthiness assessment factors that are required by law in every member state in Europe. But what open banking will enable is an even richer analysis on top of this for credit decisioning. There are also other areas where open banking can improve, and I think this has primarily to do in terms of the increasing competition and the opportunity to engage with customers and reduce costs. Return on equity is going to be critical to prove shareholder value, and open banking will allow the organization to reduce costs significantly, especially in areas such as KYC, in areas such as onboarding and customer interface, which will lead to higher conversion and higher profitability. So hopefully that gives you a couple ideas, but if you're interested in knowing more, we've prepared an entire presentation to address this topic alone. So happy to engage with you following the session.
Thank you, Jan. Well, actually, I think we can still manage one more, because that one sounds very interesting too. So with open banking going beyond regulatory requirements, how could executives better leverage on this in order to have a common understanding within their organization and across all functions?
Fantastic. Yeah. So I mean, open banking, the regulations of PSD2 are quite static, right? So there are a couple areas where there need to be significant changes, and for instance in SEA, there are a couple areas in the sense of cross-border payments, and of course in the publishing of APIs. But I think, and especially the Italians talk about an active and a passive API strategy. And I think that active API strategy, the focus on how you can use data from the industry in order to enhance products and services, is going to be an important next step. And in order to do this, I would recommend to follow that customer journey and start to identify how would data transform or enhance the different types of steps in that customer journey. So for instance, at the point of onboarding, typically a financial institution would require an individual, a prospect, to provide personal name, their first name and their surname, potentially some other PII information, personal identifiable information, as well as their IBAN accounts and some other financial details. This type of data can be retrieved instantly through an open banking connection with the permission of the customer. So I think focusing on how that data can be retrieved more easily and how it can be enriched in order to create more compelling financial products are key areas in terms of how organization can go beyond compliance and actively use the APIs in the market in order to basically create value for the customers.
Thanks. Well, unfortunately, that's all we have time for today. If we didn't have time to go through your question, or if you would like to talk to us, you can find the contact info on the last slide. Feel free to email us. And thank you again for attending.
Thanks, everyone. See you next time.